It is an honor to be here. I think that was a great setup by Michael, and so thank you for doing that. I have the distinct honor of being joined on stage by 5 very esteemed panelists whose organizations have played a very big role in driving the financial inclusion that we've seen in the last decade, and also I think are well poised to actively shape this next chapter of incorporating the next billion users. I would suggest that we go ahead and just dive in. There's a lot to cover. We can maybe do brief intros as well. The first question for everyone I'd love to hear is, what do you think that financial inclusion will look like for the next billion? And how does it differ from what we've seen in the past decade? All right, maybe you want to start?
Well, I'm personally delighted to be here. I think Michael kind of alluded to it in his comments. If you look at the last decade, we've seen financial inclusion move from a rather slow-paced, brick-and-mortar, paper-based, inclusion, which has meant that it had its very significant share of challenges in order to get deeper penetration. Now, within this decade itself, India is a great story, and I know Africa, the mobile telcos and others are making some great strides. You have seen the cost to serve has dramatically declined, and technology is a big enabler to do that. With biometric authentication and regulatory changes towards electronic KYC and video KYC, you can actually now onboard hundreds of millions of bottom of the pyramid or underprivileged or underbanked people onto financial systems at a fraction of that cost and also at the fraction of the time that it took you a decade ago. So I feel really excited about the next 10 years that's coming down the pipe, and data is going to be a big part of that.
Absolutely. Irene?
Well, thank you, and thank you for having me. I think first, who is that next billion? No? And I think that we are seeing, and it's important to segment who's that next billion, because it includes youth, it includes the fastest aging population that we're seeing ever. This applies to Latin America and the Caribbean, where we focus our work at IDB, and it's a big worry. So that would be a lot of that next billion that need to be properly served. And it includes also population that is facing and is very vulnerable to climate risks, for example, in small and island countries. So that's sort of that part of that next billion. And they each have very different needs. But I think, as Ari said, part of the response, of course, we see similarly, that is one that is combining the power of the ability of new forms of digital money, digital payments. Michael talked about the instant payment system, cross-border payments. I think we're all working collectively in enabling some of those tokenized assets. And all of it also powered by an amazing amount of entrepreneurial talent that is developing more and more disruptive fintechs. And so that's how we see it. We see it also coming from many different places. Before, a fintech was born, a fintech with a focus on financial inclusion. Today, that solution may come from an agricultural, an agtech company, could become from a combination of a health tech and an insurance company, and so forth. And we're seeing much more of those integrated, embedded services coming through as well.
Fantastic. Kristo?
So on my journey, I've met a lot of founders. I'm coming from a little bit from the tech founder perspective, who have kind of tried to take seriously the problem of unbanked. And so how do we solve for unbanked? And what's the app that they need? But if you spend some time in the villages in Africa, or Asia, or Latin America, you'll realize that the story is much simpler. There's plenty of banks around there. People are unbanked because 2 reasons usually. Either the bank is too expensive to use, and we Westerners are used to that. You just open a bank account, it's free. No, it's not free when you're in some of these emerging markets. There's a monthly charge. Or the other thing, surprisingly, they don't trust, in some countries, so it's very cultural, they don't trust banks. So it's really these 2 problems that we have to solve. And I agree with Ari here that it's not just the new technology, but the adoption of existing technologies has been so amazing over the last last decade. And what's different now is that we have all the challengers, the digital challengers, who are showing how to build a bank in such a cheap way that it can be cheap for wide masses to use for almost nothing. And it is safe, and the risks are kind of the same as they've always been. And then the next bastion, if you like, to conquer is transparency. So how do we get, and there's movement in there as well, and that's what I'm excited about, is how do we improve transparency in financial services, predictability, so that people can trust banks in all countries. That's what kind of we're working on from the cross-border perspective.
Fantastic.
First of all, thanks for having me here. Such a great opportunity to meet everyone and see what's going on around the world. I have a slightly different take on the term inclusion. I think I was just looking at some stats. About 70% of the world's population already has a bank account. So just access to an account is not the only problem, although there is still work to be done there. I think usage is something that we have to think about. And so I think democratization of financial products is more sort of how I look at it than just financial inclusion. I think inclusion is a stepping stone, but I think you really need to democratize those products to what Kristo was referring to. And in my role, when I look at countries as diverse as, let's say, Brazil to an India, to a Singapore, to an Australia, it's not a one-size-fits-all strategy, especially as you're looking at more emerging countries where the socioeconomic distribution is quite different than, let's say, some of the more established countries. You want to fundamentally redesign and rethink the products themselves. So if you try to democratize the standard credit card, in India, it may not work. You want to invent sachet products, right? So the affluent customer might afford the big box or bottle of shampoo, but that same bottle of shampoo sells as a 10 ml sachet in India. So you want to have a BNPL. Similarly, it may not be a full-on bank account. It's a prepaid wallet that you're looking at. So I think what at least we look at from an inclusion perspective is how can we democratize the financial products, and it's more pay-as-you-go, more sachet kind of constructs, and how do you take them to market?
Thank you, Lindsey. I think this is a great question about what's the difference for the last billion users for financial inclusion. The way we look at the future, we think probably there are two major differences versus what we have been seeing last 10 years. I think this time probably we will see policymakers, central bankers, and also the regulators. They might be in the driver's seat for the next 10 years. If we look at the open banking movement, it has been happening in 68 countries, and central bank is driving the open banking infrastructure. And I take Brazil as example, right? Pix is a wonderful story. And in just 2 years, and their daily transaction reached to 135 million a day. And also the cost almost zero. So nowadays, there are a lot more micro merchants, a lot more consumers, they can use QR to transact. And that significantly reduced the cost. And also, you open the golden opportunity for their digitization journey as well. I think this momentum will continue, and we are seeing more countries have open banking, and also the national QR initiative. And by the end of the day, I think these stocks will connect to each other. Another thing probably will be the technology behind the scene will be different. Now, last 10 years, we have been seeing like wallet account, mobile payment, credit tag, payment tag became the major driver to help to drive the financial inclusion, to serve the unserved, and also provide the bank service to those unbanked customers. Now, in future, if we think about the large language model and the blockchain, privacy compute technologies, those probably will kick in and have second level of the financial inclusion innovation.
Fantastic, thank you all. And you have such a varied set of perspectives that really provide some rich insights. We touched on this lowering of the cost to serve enabled by the technology, which should allow more people to be reached with new and innovative products. there was also a lot of emphasis on the importance of digital infrastructure enabling what we have seen in the last decade. I think that's going to continue to play an important role in this next billion and bringing them into the financial system. I'd love to just hear your perspectives on the role and importance of the digital infrastructure as opposed to a specific service or an app that would bring that, and how your organization thinks about modernizing at the infrastructure layer and how you're taking advantage of that. Maybe Irene, would you like to start?
Yeah, sure. So obviously, as a multilateral development bank, we have an interest in using our neutrality to enable that kind of digital public infrastructure. And partly because we see it as critical to level the playing field and to make more accessible and more cost efficient the use of new technologies and avoid silos and fragmentation. So we want to see a lot of competition and decentralized solutions on top, but we want to be built on common standards and on a level playing field. And with that in mind, and seeing that, as you also said, we see more and more countries adopting systems and stacks of digital ID on which you can have digital wallets and eventually digital currency. We created a LAC chain, which is now orchestrated by an independent non-profit entity out of Uruguay called LACnet, and it basically operates a decentralized blockchain network that has over 250 nodes. It's done with over 140 partners, public-private partners that this is for non-crypto use, but they saw something in it for them, that if they contributed to the development, each bringing something else, something different to it, an expertise in the cybersecurity or user experience or different things, they could eventually build more solutions and generate more business for them. So it's a really win-win-win. And it has enabled, which is the part that really we are very excited about, now over 80 solutions for real life. I'm talking about enabling digital wallets for a small farmer in rural Peru that is producing alpaca and now has a way to certify the quality and the origin and the entire chain, and also do the payment. And as you also said, more advances are made by countries in the enabling of national instant payment systems. Michael referred to it, but also the cross-border currency payments. These rails become super powerful for inclusion.
Wow, thank you for sharing those examples. Ari, would you like to share?
Yeah, I just want to build on what Irene has just said, that the foundational technologies can never be underestimated in this story. If you look at countries that have done well, and India is particularly a leading light on this, what one cannot forget, there's been a good 5 to 7 year period when they needed time to, actually over a decade, to build the digital ID platform, and then a 5 to 7 year period to actually onboard over 1 billion people onto that platform. Now, once that's done, that's a massive, heavy lift that every country has to do. On top of that, you take the payment infrastructure, which is IMPS and then UPI, and then coupled with the latest component of that stack is data. Because just assume from ID to payments and the digital connectivity of 1 billion phone devices enabled through mobile devices is going to create a massive explosion of data. And Lindsey, if you ask me, we are at that, a really exciting cusp on what do you do with that data, how is it meaningfully going to lead to, as I think Mahendra, you were talking about the inclusion story, not just having a bank account is sufficient, but going from inclusion to inclusive growth is going to be the next driver of economic development. Lindsey, there's one thing that I do want to stress. One of the greatest challenges, and this is not just an emerging market challenge, but also markets like the United States, where micro businesses and people below a certain economic strata, their ability to get access to credit is hugely disadvantaged. And I think what Ant does and many other players are trying to build is that capacity to create cash flow lending. Ironically, cash flow lending is available to big business, which have multi-billions of dollars of assets to provide backing for. But when it comes to the individual, we require collateral. So I think we can really make a fundamental shift in this coming decade, and that can be very exciting.
Beautiful, I love that. YP, would you like to expand?
Yeah, I totally agree. I think being inclusive actually need to party with all the partners. And not just like the wallets, not just the conventional banks, not just fintech company. I think we need everyone join hands together. And the way we look at this is like technology actually will play a very key role. And for N, we have been investing in the privacy compute technology for a very long time. And the way we look at this technology, we believe this will be the next big thing after AI. Because AI is very good, okay? But AI, most of the time, still within a silo. And by the end of the day, if we have the very powerful privacy compute technologies, net all the data from different silos collaborate with each other without sacrificing the data security and the privacy, probably we can, first of time, we unleash the full power of the economic, digital economy. Yeah.
Great. And Kristo, I know you've been very focused on the infrastructure, particularly on cross-border. Anything else that you would add?
I mean, I think we're going to be in violent agreement again in this panel, which is almost unfortunate.
You did mix it up a little.
I can't because I have to agree. This, I mean, maybe I'll borrow Bill Gates from the previous speaker. I think this quote is spot on that you know, things are initially going to be looking quite slow, and then they're going to happen really fast. And I'll bring an example. On cross-border, our customers always wanted to receive the money really quickly on the other end. And we started measuring maybe 6 years ago this idea of an instant cross-border payment, so money leaving your bank account in one country and arriving in some other country in another bank. We thought like 20 seconds is good enough for instant. And we started measuring it. It was like, okay, we managed to do like 6% of our transfers instantly. And last quarter, we reported 60% of cross-border transfers happening instantly. And this is totally one of those things where, you know, it seemed to be very slow. You know, we had one payment system in the UK that was instant, then Singapore turned out to be instant, then India with IMPS, and then once you kind of add these together, you know, suddenly you're there. You can do cross-border instant money, as the previous speaker was talking about, anywhere, almost anywhere in the world. Yeah. So I'm pretty optimistic on just looking back that, you know, good things are going to come slowly and then they're going to come quickly.
Yeah, very well said. So speaking of kind of the innovations and the breakthroughs that we've seen, I'd love to get your perspective. You know, what are one or two of the most meaningful catalysts for innovation that we see that we think is going to really help accelerate the financial inclusion in the next chapter? Artie, do you want to start maybe?
Well, you know, at the foundational level, I do want to give a lot of credit to the telcos. You know, they never get credit. They are the massive enablers of infrastructure, yes. Broadband, digital connectivity, the advent of 4G and now 5G at scale is really creating the capacity to reach parts of most geographies which one couldn't reach, you know, in the past. And now you've got satellite connectivity, which is taking it to the next level. And you'll see how deep in Southern Africa and other places in the global south, you'll see a massive penetration. So to me, these are really fundamental big shifts that are coming in. Coupled with the looking at what you've got by way of consumer aggregation. And dare I say that lots of business models, which today have been funded by billions of dollars of venture capital money, is still trying to figure out where do you make money. And I think the power is going to lie in data. And Lindsey, dare I say, I think there's a lot of work to be done there. And it's both around the regulatory framework, privacy, accountability, control, safety and security, as YP you were talking about. All of this will be so critical. And then the power of AI, which I think is already here at scale, and how can we use those technologies to really create meaningful use cases will be the future. And I think credit scoring, lending is going to be a big part of that enabler. For the affluent community, it's going to be personalized, what we call travel, contextual offers. We get bombarded with things that we're not interested in. How about getting bombarded or getting not bombarded, but getting very selective on things that really matter to you and therefore leads to greater adoption and usage.
Yep. I just want to build off of that. Mahendra, you had mentioned earlier this notion around the financial products, less so the emphasis on the account. What are the one or two things on the innovation front that you think are really going to move the needle for this next billion?
I think I'll give 2-3 concrete examples. So at least from an Amazon perspective, when we look at what are the key payment problems that we need to solve for along with our public-private partners, we classify them largely as access, affordability, and affinity. Access meaning how do you get more people into the digital fold transacting. Affordability, how can you get them to afford more, increase their share of wallet. And affinity to the affluent user, how do you make them more deeply engaged? I think on the access side, I want to share an example with the group here. It's a very non-tech example. In India, you have about 80% of people who earn in cash. So their primary source of liquidity is cash. Putting that money into a bank to then make a digital payment is a task. And so one of the innovative things that the team built was we created a product whereby we are doing deliveries to the remotest part of the country, product deliveries. At that point in time, we enable customers to put their cash into a digital payment wallet at their doorstep. It's a fully KYC'd wallet, which they can use for spending on Amazon or doing any transaction at any merchant or any P2P. So that's an example of an innovation which is truly customer backwards, that is getting the otherwise cash customer into the digital fold. Another end of the spectrum, which is a very high-tech example, is as you look at inclusion of those customers who are not necessarily socioeconomically distressed, but who are not technically as savvy, right? So using an app and all of that is complicated for them. I think voice assistants play a very critical role in terms of simplifying that interface. So the innovation that we see happening is not just on the axis of how do you KYC, how do you do ML checks, control, that's foundational, that has to happen. Money movement has to be seamless, but it's also on the interface of how people are interfacing with your payment products. At the one end, we are talking about people who are actually giving us physical cash. At the other end, we are talking about older people or younger kids who are actually making a payment using Alexa and saying, hey, just pay this thing. And we are seeing varieties of this across the globe, right? So when we look at a Mexico or a Brazil, we have built out a network with local partners where consumers can walk into a local convenience store, deposit the money into the wallet, and then start using it to pay digitally. So I think you will see innovation on many of these tracks when it comes to the digital e-commerce options. So that's on the consumer side. I think equally fascinating on the merchant side, I feel, is the opportunity to innovate, to get them from selling highly locally to regionally, to nationally, to globally. Because I think payments has to play a very foundational role. I mean, I think Ari talked about telcos. I think telcos, payments, and logistics is what makes commerce happen, right? And so as you think about this kind of stack of across the value chain, yes, the telcos have connected the world. Payments is now connecting the world. And then as you think about logistics also connecting the world, a small seller sitting out of Singapore can sell globally on a global platform like Amazon.com. And I think that is very valuable. So I think, and again, there you need that public-private partnership of working with like a local business federation. We here in Singapore work with the Singapore Business Federation or Enterprise Singapore to figure out how to take these small, medium-sized businesses and take them from Singapore to servicing Asia, to servicing the globe. So I think there are innovations happening both on the supply side as well as the demand side, and I think that's super exciting.
And you mentioned as well, again, there's different flavors of local innovation too, that even though we're talking very generally about a large population, there are very different needs too that vary by region or by country as well. Irene, maybe you can share with us what you're seeing in Latin America and specifically one or two innovations that you are excited about.
Yeah, so we are seeing developments along the examples that we've heard here, and of course Brazil is leading, and both on the digital public infrastructure and the instant payment system with Pix, but also in terms of the private ecosystem, including VC funds who are picking good companies, and we brought here to the FinTech Festival a couple of them leading ones. But I think that, and they are obviously transforming completely payment systems, new business models that are improving accuracy, predictability of credit scoring, and the ability for last mile merchants to transform cash into digital forms of payment. All of that is happening with many, many fintechs across Brazil and other markets in Latin America and the Caribbean. But the piece that I think needs still a lot of work, and it's an innovation that we're trying to foster, is how do you bring in the traditional financial institutions, second-tier rural banks, cooperatives, that have the trust of all of those, and like 1.5 billion of still population that is unbanked, that could be their customers, is in their communities, or the millions of SMEs that provide 80% of the jobs, and helping them adopt more easily these innovations and use their data. We have a data economy project, for example, for SMEs to be able to leverage their data. I think it's key, because otherwise we're going to exclude them from the solution or have solutions that take a lot longer to get to this population.
Maybe just building off of the importance again of data and small businesses, I want to talk about digital commerce, right? We've seen tremendous growth, of course, both on the consumers as well as on the merchant side. And I'd love to hear both from YP and Mahendra, if you can talk a little about what you guys are most excited about in terms of the innovations as they pertain to digital commerce and how that brings in many more people into the fold. YP, will you start?
So for digital commerce, I think indeed we have been seeing a phenomenal growth for last decades. I think in the last decade, it's continued to be the major driver for the economics worldwide. In terms of the innovation, I'm seeing maybe two things would be very, very important. We should continue to focus on and driving it. The first thing is like the AI. In a large language model, first time we can allow AI to understand human language. That's huge. And in old days, whenever like e-commerce customer, they need help, they either get into a long queue for toll-free number or talk to a robot that only able to give you standard answer. But in future, with large language model, probably they can enjoy a very premium service and in a very, very low cost. And in old days, private banking only available for high-income people only because of the cost. But in future, large language model probably make it available for everyone, even for the low-income customers. I think that will be the huge thing. The second thing we should continue to look at is on the security side. And make no mistake, those bad guys also using AI as well to improving their skill, their techniques. And with AI GC, any individual easily can fake their facial ID, voice ID. And I think eKYC will become more and more challenging moving forward. We need to continue to invest on the technology, raise the bar. Otherwise, we can no longer safeguard the business like we are right now. And last but not least, I have to emphasize on the importance for privacy compute technologies. And if we look at the future, if we can find a way to connect all the institutions, all the merchants, and all the partners together, and while we continue to safeguard all the data, all the privacy security, we can continue to allow them to collaborate with each other. I think the new business model will come up, and the full potential will be unleashed.
Wonderful. Mahendra.
Yeah, I think just echo everything that YP said, and just building on it, I feel the foundational investments that need to be made, whether you're a bank, a network, a fintech, a merchant, in terms of security, fraud, privacy, I think, I mean, I cannot emphasize it enough, right? Because I think all of this ecosystem works on trust, and the slightest sliver of vulnerability does expose the whole system. So I feel very foundational to all that innovation is sizable amount of investments going into these three areas. I think then once you have that in place, then you're building on what can I do that is really innovative, that enhances affordability. So I think use of AI and scoring to take credit to those consumers who don't have it, I think is very valuable. But I think equally valuable is because of technology and e-commerce and social commerce and so on and so forth, your cost of distribution can be dramatically reduced because you're really putting, to Ari's earlier point, it's not just about incentivizing the affluent customer with a reward, but it's also placing the credit product to a credit underserved customer when she really needs it, knowing fully well that she has the capacity to pay it back. So I think that is where the invention really has to happen, and it's not easy. It's easier said than done. So there is going to be a lot of need for resources, technologies to be invested in making that happen. I think equally on the access side, we talked about digitizing cash, getting new customers through new user interfaces. I think the previous speaker touched upon instant payments. I think that's going to be like the seminal truth across most markets in terms of driving inclusive access. So whether you're talking about UPI in India, Pix in Brazil, Pay Now, Pay To, it is just I mean, for most of us, probably we saw the internet adoption kind of go across like that, right? So it's that. And I think then we cannot ignore the customer who's well served today. And they're inventing the right affinity products that really makes them more engaged, that, I mean, of course, reduces the spam, but also it really gets them to think beyond just classic consumption to growing their financial health, I think becomes very interesting. So whether it is about positioning the right credit products, the right wealth products, the right investment products, insurance products, becomes very exciting. So I think it is really about, much like, let's say, the CPG industry or the FMCG industry, and how it kind of took different positioning for different products for different customer segments. I think this industry will probably have to go through that learning curve as well.
Wonderful. We talked earlier about the importance of public-private partnership, particularly on the infrastructure side. I'd be curious to hear your thoughts on what we see as the intersection now of fintech, payments, traditional financial institutions, and even digital assets as we look at this next chapter of financial inclusion. Kristo, maybe would you kick us off?
I can do. I would only add to the last conversation. I think there's one more catalyst in financial services that we should give credit to, and they are regulators. Because a lot of these technologies that we're now enjoying, they're not technically that complex. But what's been hard is like UPI or IMPS. So how do you get 100 banks to adopt this technology so that they can talk to each other? And in some ways, what's been super impressive is how open banking or, many other such technical innovations have been enabled, and it's really driven by regulators because it's very hard. It sometimes happens, but rare that 100 banks decide that, hey, let's do it this way. Of course, they can be a drag as well if they come up with like bad ideas, but more often than not, it's good.
Thank you. That's a very good addition and a very important part that is giving the clarity, right, to align the industry so we can move forward as well. Ari, I don't know if you have any thoughts on this one.
Yeah, no, absolutely. I think, Lindsey, the question on is public-private partnership a good idea? I would say it's an imperative. You just cannot build out an ecosystem on its own. And I think you really need all participants to come together. And I think the whole DPI framework is a very compelling framework. India's gone through the hard work of bringing together biometrics with payments and now data is, if you look at some of the open credit enablement network and things that they're trying to build, which will allow for small ticket lending as well, these are really powerful sets of infrastructure plays that are coming together. Some of it has huge audacity embedded in it, but you need audacity to do it. Now, how do you take that and bring it into another market, another country, another environment, I think is going to be the real test. And you got to believe that this has enough opportunity for public and private sector to collaborate and partner together. You still need to put up technology infrastructure. You will still need the software. You're still got to make the intelligence layer. You need the cybersecurity layers to work. And then you need somebody who's going to run and manage with the skills. So all of that is not residing in one group of people. It's residing on a whole set of market participants. So I think if you approach it in that manner, including regulators and others, as Kristo, that you rightly pointed out, that the regulators are a very critical enabler on what to allow and what not to allow, how do you protect the data. I feel we're on a journey, but I think there is an enormous hope that what has taken us 20 years or 25 years, it should be a much faster journey. In the coming 10 years, we should achieve much more success than in the historical past.
And so some of the learnings of the past decade around how we work together and how the different ecosystem players, that can really help accelerate to the next chapter.
Exactly.
Mahendra, do you have any views on the intersection of these different parties, whether it's the public-private or different constituents in the private landscape working together?
No, definitely. And I think one of the neat things that I see in the Indian ecosystem and how it has co-opted private players into especially like the growth of UPI is something interesting. So I think conventionally you could have just left it to the banks and the networks to spur the UPI ecosystem, but this whole notion of a TPAP, where it is could be an Amazon or a Google, that is really the consumer app that is driving UPI adoption, is a very interesting approach, and it is a very deliberate approach, right? Not because other people cannot build apps, but it is because the consumer engagement with those apps is of a different kind than a conventional payments app would. So I feel that as we think about the private public or the digital public infrastructure, I think in addition to the classical pieces around security and fraud and risk and privacy and payment flows, we really have to structure the right incentives for the right players in the ecosystem, because it can't be all taxpayer funded. So we need to kind of invent business models because the conventional four-party model of payments has worked, right? So if you're looking to sort of reinvent that, then we need to redefine what the economics look like for the different players to really invest and scale it. Because it is not all just venture capital funded. I think there's large companies that are putting big stakes in terms of driving adoption of these new technologies, and kind of clearly defining what the long-term incentive structures are becomes very imperative. And I think that is where the classical model probably has merit, but it probably needs some variants and extensions as we look forward to it. Because I think that will just give it a force multiplier versus keeping it restricted to certain
yeah, that touches a little bit. We spoken earlier about the technology bringing the cost to serve down, but Kristo, you touched on this as well, just in terms of how that flows through in terms of reducing fees and basically shifting kind of the economics in the business model as well, if we're really going to engage that next billion. Maybe I would just say we're running up on time here. I would love some closing thoughts from you all. Let's pretend that we're here in 10 years from now. We're all reconvened. We've been hard at work. What do you think we'll be talking about 10 years when we're talking about this topic and we look back, and what will be most pertinent at that time? YP, do you want to kick us off?
Wow. 10 years later, I thought one thing probably will never change. We will continue to talk about the security, risk management. And I don't think this problem will go away forever. And the second thing probably would be like, hopefully, we are celebrating the reglobalization. And for the open banking, for all those private sector inclusion initiative, hopefully. And all the SME can do international business, just like the big guys. And also all the individual can travel to other country and using different form of digital payment. And individual can enjoy all those inclusive financial service. And I think the world will be better. And at that time, probably, hopefully, we will do a little bit celebration about the reglobalization. And last but not least, I think at that time, probably we will talk about a little bit the boundary of the technologies. And consider all the fast forward for technologies like AI and some other technologies. I think for a certain time, probably we need to stop and rethink, and where's the boundary? Where should be the area we continue to double down, keep driving to bring more small and beautiful changes to the world? Where are the area we need to be a little bit cautious and take a slow pace and rethink and let the society ready?
Beautiful. Mahendra.
It's hard to top that. No, but I think like if I were to say 10 years ago, if somebody had said you would have something like Pix and a Pay Now and a UPI, I think we would have said, hey, wow, like that's really imaginative. I think if you were to think 10 years forward, the inclusive application of some of the technologies that we are seeing now, whether it is blockchain, LLMs, AI, and what it can do to really transform the consumer experience is super exciting. And I think along with that, I think we as an industry should always keep going back to saying that the more you democratize it, the bigger your security risks, the bigger your fraud risks, the bigger your privacy risks. So I think really being dual focused on both these priorities becomes super critical. So you can't just keep making experiences simpler and more accessible and more inclusive, but not worry about the other piece. And I think the last part that YP touched upon is something which I think we have to wonder. Like what happens when all this ideal utopian stuff happens? It's hugely secure, it's like really seamless. What next? And I think that's where we probably need to kind of conjecture where the world would be 10 years from now. But I think it's the next 10 years seems like there is plenty of work for all of us to do.
That's good. Kristo.
So I think in 10 years, the Singapore FinTech Festival is going to be much, much smaller. Because there's going to be much less people working in financial services because it's mostly going to be done. Maybe thanks to AI a lot, but because there's not going to be many people needed for this, it's also going to be quite cheap, quite fast, automatic. So I think it's just going to be much less of a problem to talk about.
So you think we'll have accomplished a lot then, and so there will be fewer people needed to work on it.
Exactly.
All right, very good. Irene?
Yes, so I think that we would have seen completely mainstream models for programmability of money, for multilateral finance system to allow for very easy and secure settlement, all of that financial architecture laid out and automated, regulatory compliance automated, all of that. So that's probably a lot of us less in the room, but turning into something else which is in many new business models that are obviously leveraging data and AI and that are making making a big difference in the affordability and the affinity and access to financial services. But we need to make sure that for that to happen in an inclusive way, that we use these 10 years to really lay the right rules for competition. Because the threat of the dominance of a few players in Web3, AI, this new tech wave, that we've started to see in Web 2 is enormous. And so I think there is a lot that we should do there. And if we do, then maybe when we look again at that chart of that Kristalina was showing in the morning of the number of days that it takes for 100 million customers to be acquired, we'd probably see, hopefully, if it's really democratizing the deployment of solutions, we'll see many, many more companies just taking just a day or two, and companies that are completely new, not the incumbents.
Love that.
Lindsey, since we're here in Asia, I think in the next 10 years, India together with ASEAN is going to be bigger than the Eurozone. Now, that's not a prediction, that's a fait accompli. Now, the prediction is that in this coming 10 years, let's hope we are lending hundreds of billions of dollars to the bottom of the pyramid and closing the income gap and the inequality that exists in society, and therefore we will have a more balanced society where the economic progress and development is going deeper into our societies.
That is what we hope for, absolutely. So we are at time. Thank you very much for the enlightening discussion and also just everything that your teams are doing to contribute to this vision and deliver the benefit to people who need it most. Please join me in thank you our panelists here for the good discussion. Thank you.